Hey everyone, how you doing today? I have an interview, a discussion that you are going to like for many, many reasons. First and foremost, we're going to get you on a discount, a reduction on a fee for something that you want, or at least a lot of you ask about. And we're going to introduce you to a program that a lot of you go, hey, what do I do after I get 10 properties? A lot of you have said, hey, Michael, how do you get deals done? Where do you go? What's this? What's that? And the first thing I say is, well, you know what? First, get your first deal done. But there are answers after you get 10. You're just not locked out. So I got a good friend of mine, Sean Penn, on the phone or on the interview here. We're going to talk about it. We're going to talk about this program because, again, these are the things you're going to look at. So Sean, welcome back to the show.
Yeah, thank you so much for having me.
So let's get into it. Tell the audience, introduce who is Sean, what do you do? Let's remind them where you're working, and then we'll get into the program.
Sounds good. So hey everybody, my name is Sean Pan. I'm a real estate investor based in the Bay Area. I flipped homes locally and I own some properties out of state in Jacksonville and in Georgia. And I also work for a hard money lending company called Conventus Lending. So we have two separate programs. One is a typical bridge loan for your fix and flip projects. And the other one is our long-term rental loan program, which is what we're going to be talking about today.
Very cool. So we're going to dig into the long-term rental program. Sean, let me just ask you some quick questions. Is this nationwide, all 50 states, or are we talking, a subset of that?
Yeah, so we can only do 30 states at this time. Some states have stricter regulations and they kind of require us to have a physical location at each state.
Understood.
So eventually we do plan on branching out, but for now we're limited to about 30 different states.
So again, more than half. So that's cool. Again, folks, as we go through this, Sean will give his contact details. Actually, Sean, let's do that right now. If somebody wanted to ask you about this straight out of the gate, how do you want them to get a hold of you?
Yeah, I mean, Instagram is a very popular way that people have been reaching out to me, and that's at I am _ Sean Pan, SEANPAN. But if they want to reach me through email, they can reach me at Sean, SEAN, at everythingrei.com.
Very cool. All right, so we're in 30 states. Let's talk about the program. So first off, I assume you're in California.
Mm-hmm.
Great. So I like doing this because I can just use my examples. So let's say I was going to call you up. And do you want to, is this for purchase or refi?
Both. We can do purchase, refi, cash out refi.
Oh, nice. All right. So let's do purchase and refi in one of my examples. So let's say I find a property. You've been with me to Fresno at least once. So let's say we go to Fresno. I find a fixer upper. Actually, yeah, let's just do this whole thing. So are you going to come in with me out the gate when it's totally trashed, or do I need to get it fixed and rented before this program kicks in?
Yeah, great question. So this program is for properties that are rent ready. So it doesn't have to be occupied at the time of purchase, but it does have to be rent ready. And if it's in a condition where, yeah, like it's livable but not pretty, we can still do that loan, but not if it's like completely trashed.
Right, because that's what the other loan program's for, right? If you want to kind of go in and buy a fixer, you go get short-term debt, fix it, move it, makes total sense. So okay, so I have something you've heard me call pride of ownership rentals. Let's just say I was going to keep that, so it's dialed in, it's up, everything's done, it's rented top of market. Now I come to you. Let's say it's worth 200 grand, and it's rented for $1,500. What else do you need to know from me to kind of just get the ball rolling?
Okay, so for this program, one of the biggest factors is your credit score.
Okay.
There is this matrix that we look at with varying degrees based on your credit score. So the minimum credit score that we can allow is 660.
Oh, wow. All the way down there. So let's assume I'm over 800.
Yeah. So over 800, 760 is our top tier score.
Okay.
Yeah. And then we have another gradient for the loan to value ratio.
Okay.
So whether that's purchase or refi, okay, the lowest one is 50%. And the highest one is up to 80%.
Oh, wow. Okay.
Yeah.
So you'll go to 80%. So you'll, again, using this real world example, you will loan on this assuming it appraises and all that other nonsense. Let's take that off the table. You would give me up to 160K.
That's correct.
Okay.
Yes. Just a little caveat there. There is a seasoning period. So I'm not sure if your listeners are aware, but it's not like you can do the burst strategy where you buy it, fix it, and then refinance within like a month or two and expect to get all of your money back.
Okay.
We do have a 3-month seasoning period to give you your hard costs. So your purchase price plus your rehab costs. But if you wait over a year, then we can give you your appraised value. So 80% of your appraised
that's
value.
interesting. Let me repeat that back. So let's just say, I thought you were going to say 6 months. You said a year. So let's just say, again, let's say I bought this for 100. I put 50 in and it appraises at 200. Again,
Mhm.
just simple examples. So if I did this anytime between day 0 and day 90, doesn't count because you need those first 90 days. Between day 91 and day 365, I would only get the lower of the two, which in this case wouldn't be the 200. It'd be my 150. Is that what you're saying?
Yeah, so it'd be 150 after 90 days. And then if you did it at like day 0 to day 90, it would be just from your 100.
Oh, there you go. So it'd just be the 100. Got it. That makes sense. So again, day 0 to day 90, just purchase price. Day 0, no,
Day 90 to day 365 is your 150.
purchase plus repair, and then day 366 is new appraised value.
That's right.
Perfect. Oh, I like this program. Okay. So that makes total sense. Again, do you want to throw out rates, or you just want to say, hey, call me and we'll talk about your situation? Or do you want to talk about,
Yeah.
since you said a matrix top and bottom, what do you want to talk about?
We can talk about rates, and just to note that the rates change all the time.
Yeah.
And of course, like these rates aren't going to be the same rates that you see for like your traditional loans, like your conventional loans. So those rates may change. Our rates may stay the same, or vice versa. Our rates may change and theirs may stay the same.
Yeah.
So
And I tell
they're
people
based
all
on
the
different
time.
things.
I tell people all the time, when you're getting your first 10, go nuts on bank loans, right? Sub 3%, 80%, 75% LTV. But once you get past 10, you're going to pay higher rates. I tell people all the time, I'm happy to get 6.5. That's just where
Is
I'm
it what
playing.
you pay for after 10?
I have done loans at 6.5. I haven't done a loan. Actually, I've only done 2 loans in the last year. They're both at 4.25.
Nice.
But I mean, I was paying 6.5 right at the peak of the craziness, like 2018, when rates were much higher. But yeah, I've paid 6.5. It's just
Yeah,
what
we have
what
some
I can
clients
get.
and they were paying like 10, 12% because at some point they just use private money lenders
Yeah, I've done
because they
that.
just can't get a bank loan.
Yeah, I mean, I've told my story, right? There was a time where banks said no. 800 credit score, 7-figure net worth, 6-figure income. Nope, we don't want to lend to you. I'm like, are you kidding me? What the hell?
Yeah.
So, all right. So let's talk rates. We're talking, in your example, 50% LTV, so the least risk, and a 760 credit score. So that would be, if I understand your matrix, the lowest rate possible.
That's correct. So again, the way these loans work is you have a base rate and then you have adders or subtractors to adjust your rate. So from like the base rate standpoint, at a 30-year fixed, 50% LTV at 760 credit score, your base rate starts at 4.75%.
Oh, that's not bad at all.
That's the base rate. Okay, and that's for your purchase, cash out refi, or just rate term refi.
Right.
And then at your lowest matrix, which is basically at 80% LTV at your low credit score,
Yeah.
it's going to be 6.875.
That's much better than I expect you were going to say. So again, right, just to tie that in, you were saying 660 credit score and 80% LTV. Again, that's the base. And then you have adders and subtractors, location, cash out, all those things. So this is
just again, another little start here. This program is a little bit more complicated, which is why I would like to have this conversation here. For the 660 credit score, it's doable, but the LTVs for those type of clients is reduced to just 65%.
Of course, I would expect.
And then for the 680 credit score and above, you can go up to 80%.
Okay, so not much higher. Okay. Wow, this is really cool. This is, again, who is offering this? What company?
So I work with Conventus Lending. We're based in San Francisco.
Yeah, this is a very exciting program, folks. And again, folks, right, these are my options, right? I'll use my example, right? I'm going to look you up for this because, again, my options today were use private money. I could do portfolio loans, right? Which is where I take a bunch of assets and go, hey, these are going to be long-term keeps. I'll put them together. It gets me probably something in the 5s if I were to go that route. But I don't like that because then you got to take ins and outs and it's just a mess. But this is an exciting program because, again, you said it, 30-year fixed.
That's right. Yeah, 30-year fixed, so no balloon payment. We don't require you to put like your properties into a new LLC. Some places force you to do that, which can incur some transfer tax costs.
Sure,
do that.
Of course.
Yeah.
Wow. What else do we need to know about this program? Because this is pretty sexy.
Yeah. So I think the biggest requirement for this program is something called the debt service coverage ratio requirement. And long story short, it just means that your property needs to generate enough income to pay for your principal, interest, taxes, and insurance and association dues. So that's short form for that is PITIA. We calculate DSCR a little bit differently than other portfolio lenders might. Usually other lenders will look at your net operating income as your numerator. So they want to see your gross income and subtract all of your operating expenses. That's your top number. For us, we just care about your gross income. So if you rent for $1,500 a month, then we use 1,500 as the top number instead of subtracting all those things. And then we divide it by your PITIA. That ratio has to be greater than 1 for just to qualify. And if it's greater than 1.15, then we reduce your rate by 1/8%.
Nice. Okay. And now just so I'm clear, and the others are as well. So you do that on an asset by asset basis, or would you look at my portfolio of hundreds of units and then do that? Or is it just that one unit we're refining?
Yeah. So typically we do it unit by unit, but in certain cases, like let's say you have a huge portfolio, we may be able to make some exceptions for you.
Okay. Make some that's confusing to me. So let's say I'm an investor and I have 5 houses, let's say, for example, and I want to refi one of them. Are you going to come in and ask for my income for all 5 houses?
Or no, we're going to look at the ones that you refi with us. But if you're saying you're doing all 5 at once and maybe one is a little off on the DSCR, then we can do some exceptions there.
Understood. All right. So really it's asset to loan is what you're talking about. Okay.
That's right.
That's what I would think. Okay. That's really cool. Are you requiring impounds or anything extra in this program?
Yeah. So if the property is vacant at closing, so that's defined as, when we're closing, you don't have a lease that starts within 30 days of closing. Yep. We do require 3 months of the PITIA in like an impound account.
Yep.
And we will pay your first 3 months of PITIA through that account anyway.
Got it.
So yeah, it's not like we hold off.
Yeah, again, folks, the A is association fees in case you're not familiar with what the A is there.
Yeah, like a homeowners association.
Yeah.
Yeah, so that's all we require for impounds.
That's cool.
But we do want to see that you have at least 6 months worth of the PITIA in a liquid account, just so you can, pay for your fees.
Wow.
And these loans do come with the escrow accounts. So when we do your mortgage payments, we do pay, for your insurance and taxes as well. So we take that up front.
I like it. I like it. So, okay. So let's talk about the discounts. You're going to give people that reach out to you on this program, if they watch this channel, you're going to allow them to save $500. So want to tell them where that is?
Yeah. So again, you can reach out to me personally at sean@everythingrei.com. We'll hop on a call and see what your situation is like, give you a soft quote. And then that's where we can give you a discount for the processing fee. But you have to mention that you came from Michael Zuber's channel, One Rental at a Time.
Yeah. So again, folks, One Rental at a Time is trying to save you money. I told you when I got over 15,000 subs, we were going to try to use the weight of the channel to save you money. So again, processing fee used to be $1,500. It's now $999. I just say $500. It saves you $501. Reach out to Sean either on IG or his email. And Sean, any closing comments on this program? It's pretty exciting.
I do. I just think that, again, this program is a little bit more intricate. So if you don't mind, we have a couple of things I want to go over with your folks. Okay, so besides the 30-year fixed program, this program also does have a 7/1 adjustable rate mortgage version, a 5/1 adjustable rate mortgage version, as well as a 10-year interest-only version.
Oh my God.
So that means that it's a 30-year fixed loan, but for your first 10 years, it's interest only. So it can greatly increase your cash flow.
Yeah.
And then you pay off the rest of the loan in the next 20 years. These programs come with a default 3-year prepayment penalty. So what that means is if you bought the property and you sold it within the first year, then you incur a small prepayment penalty, and it's based on a step down basis.
Yeah, it's a 3-2-1, I'm guessing.
Exactly. So the first year, if you pay it off, then you pay 3% of the loan amount in prepayment penalties.
Yep.
But if you want to lower your interest rate and you plan on holding this for a very long time, you can opt in for a 5-year prepayment penalty, and that reduces your loan by 1/4%.
Is that only is that for the 30-year fixed or only the ARMs?
It's for all of them.
All of them.
Yeah, for all of them. If you opt in for that, then it goes down.
So again, I just want to repeat. So let's say this house we were talking about, 200 grand, blah, 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 earlier in the show. If I'm going to hold this until I die, I might as well sign up for the 5-year prepay. It's going to lower my interest rate, is what I heard you say.
That's correct. And if you want to, these loans come with a default 1% origination fee as well. So you pay 1% of the loan amount to close on the property. If you opt in for 2% instead, then you lower your interest rate another 0.5%. So that's also a huge way to make some good savings on your property.
Well, I have to do the math on that. What, a 0.5% interest on 150K loan? How much is that? Do you have
Well, basically, you will pay off your extra 1% in just 2 years.
That's what I was going to do. That's where I was going. So the break even's 2 years.
Yeah, and if you have a 3-year prepayment penalty, then it's totally an option to go for.
There you go. I like this. All right.
Yeah.
Wow. There's all kinds of goodness. I may have to reach out to you on some property I own and see what's what. Any other closing thoughts? This is pretty cool.
Yeah. So we can do these loans up to, I believe, a 6plex, maybe 8plex with some exceptions.
Okay.
But generally, these are for like single family homes to 4plexes.
Oh, one more question has hit my mind. What's the minimum loan amount?
Great question. So the minimum loan amount is going to be $75,000 per property. But if it's under 100,000, I believe there are some adders on your rate
for sure.
if the LTV is high.
Yeah, that makes sense. So again, folks, if you're buying an 80K house in Cleveland or something, it's not going to qualify for this, is what I hear you saying. And again, it's subject to change. This stuff changes all the time. So, I mean, the rules could change, but most companies can't make money doing 50K loans. It's not profitable. So it makes total sense that the minimum loan 75 grand. And what's their turnaround time? Are these like normal banks where you're talking 30 days from app to completion, or do you guys, try to get it done in 10 to 14 days? What are you thinking?
Yeah. So for our bridge side, we can do 10 to 14 days. This program requires a full appraisal, so it does take 30 days.
That's fine. That most people should expect that. Very, very cool, folks. One more time, Sean, how do you want people to reach out to you? Because I think your phone's going to ring, or email, or whatever you want to do.
Perfect. Yeah. They can reach me at Sean, SEAN, at everythingrei.com. That's my email. And just say you came from Michael Zuber's YouTube channel, and then we'll be in touch. And
what I'll do, Sean, is I'll put your IG and your email as the first line in our video, and your video will be live today. So thank you for doing this, buddy.
Perfect. Thank you so much. I really appreciate it.
You got it.